Hello, this is Bryce Knorr, Senior Editor of Farm Futures Magazine. Welcome to The Buzz for Friday, July 19th, 2013. Grain futures head into their most crucial week of the season so far. Market analyst Paul Bergner joins me to discuss the outlook for the end of July and beyond. Hot, dry conditions baked the Corn Belt this week with only limited precipitation. That caused corn ratings to slip just as the crop began pollinating. As usual, weather models were all over the place, but attempts to rally were frustrated until December futures finally broke below $5 again on Thursday. Trading should be extremely nervous into the weekend. Forecasts show potential for a couple key rain events next week, but with amounts seem to be changing with each computer model run. The American model, which goes out 15 days, is again showing heat returning for the final days of July, after a respite next week. I plugged weather so far in July into my model, trying to get at what these conditions mean. They suggest more deterioration is likely, with production potential slipping to around 13.7 billion bushels. Still, that would leave carryout around 1.6 billion, well under USDA's forecast of almost 2 billion, but it would still mean plenty of corn sitting around next year. That means rally potential could be limited. Funds continue to press their record bearish bet, which could provide fuel for short covering rallies at the least. What do you think, Paul? Is it time for a bounce? And how much is possible?
Well, I think a short covering bounce might be small, and I'm not really excited or ready for that bounce quite yet, but I do think it could come middle of next week if it stays hot and dry in the Midwest. And I do think if we get a bounce, we're looking at 5.25. Seems pretty doable. 5.50 if it stays hot and dry, clear into the late in the week. I think the bigger issue is, as you mentioned earlier, what do we look like out there 10, 15 days? And it looks to me a little warmer and a little drier. I think that might be where the big rally comes along.
The crucial window for soybeans is still weeks away, which has helped support the bean market. Forecasts for August out today show potential for heat to last in western areas, with other models suggesting heat building into the end of the growing season as well. If the heat holds, production could drop below 3.2 billion bushels, triggering rallies back above $15. Traders appear nervous, but not that nervous. November futures is consolidating the middle of its trading range, with some big days both up and down this week. So far, new crop has been unable to mount a move over 13 bucks. Potential for a 3.4 billion bushel crop still looks possible, though weather fears could still press the market towards 13.50. And let's not forget about old crop. Though basis broke this week, supplies remained extremely tight. Crush for June released by the National Oilseed Processors Association was more than expected this week, suggesting significant rationing and imports will be needed to keep the U.S. supplied with protein. Paul, beans look like they have some pretty good support. Will that be enough to keep the market from cracking until more is known about yields?
I think so. I think that's kind of where we're at. We're still facing some infrastructure issues in Brazil, and the amounts of imports that are available on a timely basis might be a real issue for us. Higher prices are going to be necessary, though, if we're going to do any significant rationing on out through the rest of this old crop. So, there's definitely some strength in there. It does seem like to me that we're sitting in that 12.50 to 13 range and kind of bound in there until something breaks. And it might be weather a little bit later on. It could be continued crush numbers that look pretty big. So we'll see where we go with this one. But I think there is definitely some upside left in this bean market.
While corn and soybean traders fretted over weather, the wheat market focused its sights on demand. Exports are off to a good start for 2013, and the news flow was positive. Brazil should be importing more wheat, with the freeze possibly damaging the crop there more. Even Argentina may turn into a buyer this year. China, a huge buyer of soft red winter wheat from the U.S. recently, reportedly may have a massive need for imports after damaging weather that hurt supplies of quality wheat there. However, the U.S. isn't the only store in town. Indeed, Indeed, that was the theme that kept the wheat rally in check this week. China went shopping for Australian supplies, and Egypt returned to the market finally by buying 11 million bushels of wheat from various Black Sea countries. French wheat is priced well below U.S. originations from the Gulf too, boosting prospects for European sales. Paul, if our prices are too high now, does that mean they have to come down? Or will the rest of the world rise to meet our level, giving us a chance for sales and higher prices?
Well, I know we missed some sales this week, but the report still showed 36.6 million bushels on Thursday morning, so it's not terribly disappointing. And any other question that sits out there is, did we really want that Egyptian sale? There's still some concerns about how we're going to get paid out of that one, so we may not be terribly disappointed on that one. I'm not real sure how much higher prices can go with the current strength of the dollar and some better than expected numbers coming out of Europe in terms of what they're thinking the yields are going to be. So uh, we may be on a fine line as to whether or not we can handle any higher prices, but I'm not sure that we have to give up a lot at this point either. One thing that's been real positive this week is dry weather in the Midwest, helpful getting that crop out, and especially after seeing some concerns about sprout early in the week. So I'm not too concerned about wheat prices. I think we may be bumping up against a little bit of an upside concern there, but otherwise we're okay.
Well, thanks, Paul. I'll be off next week, but we'll return in August with another edition of The Buzz.
We'll have to have more margin now, there isn't any doubt. So you better dash with a load of cash or we'll have to sell you